All right. Here we go again. Back to work here tonight. FOMC is behind us. Hope you guys made some money out there, but it's back to work tonight. We got a big day coming tomorrow. Reaction Thursday is right around the corner. We have a lot to cover in tonight's video and a lot of great trades setting up for what could be a very busy Thursday in our trade room tomorrow morning. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in though and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video, do me a favor, will you hit that like button? I appreciate you guys supporting the channel and tuning in tonight. But enough of the intro, right? Let's get ready for Thursday. Thursday could be one of the best days of the week. We call tomorrow Reaction Thursday because the day after that big FOMC announcement here this afternoon. Well, boy, you can see here, bears have all the control right now. S&P, of course, is bearish. Nasdaq is bearish. Bears have these very strong moves down right now on the Nasdaq, Nasdaq and the S&P. But you will quickly see here tonight, though, we are running into some very, very big weekly, prior week, monthly lows here right now, which definitely is great for a reversal. So we have a lot to cover here tonight on both the S&P and the Nasdaq. We know that sellers will be looking for shorts on the next bounces, but you'll see why tonight we definitely want to keep our eyes open for reversals tomorrow because that might be some of the easiest money that is made on Thursday. So we'll cover both sides because there definitely could be some sell setups for tomorrow, but we'll certainly cover some short squeezes and some reversals here on the video here tonight. Over on the crude oil is very bullish right now. We have a beautiful bull, basically a bull spike into a range. We're looking at bear traps and bull breakouts. Bear traps and bull breakouts got a lot of potential for a kind of a slingshot run going higher. Don't be surprised. You'll see tonight. Don't be surprised if we get a head fake going lower, though. That head fake down to 87.5 or so, that might be the best trade of the week for oil traders. We're going into the coldest time of the year, so oil traders, this is your time to shine. We'll talk about my favorite trades for oil as we go throughout the video here tonight. Now, before we jump in and go over all my favorite pullbacks and reversals and breakout trades here for tomorrow, let's all get on the same page here first of all, because we do have a little bit of news tomorrow. You do want to be aware of the news here for tomorrow. The big news for tomorrow, it may not stand out to you, is that ISM Services Index number. You might recognize that ISM because we saw that manufacturing number. The manufacturing number is kind of like the big brother of the services index number. But we've got another big news report from the ISM coming tomorrow at 10 o'clock Eastern time. And I'll tell you, we have seen a lot of our best trades over the past 2 or 3 weeks have come during that 10 o'clock to 11 o'clock block of time. So definitely don't sleep on that ISM services number tomorrow. That will definitely be the big news on my radar for tomorrow. Also be aware too, if you're in Asia or if you're in Europe, we do have a BOE, a Bank of England announcement that will be coming out, of course, before the open tomorrow. Now, why would I talk about the Bank of England right now? Well, because if you recall, a few weeks ago, right, when they had that relatively short stint from the new Prime Minister in the UK, there was that big bond market collapse and all that crazy stuff that happened in their fixed income markets. And so tomorrow, we're going to hear from the BOE, and I can only imagine markets will be paying attention to what they say tomorrow, right? Because a lot of turmoil in those markets in a relatively big economy there in the UK. So keep your eyes open if you're in Europe, if you're in Asia, that BOE announcement before the open tomorrow. But again, if you're with us tomorrow in our trade room, that 10 o'clock news is the biggest number we're watching for tomorrow. And don't forget, although it's not as important as today's FOMC announcement, we do have a big non-farm payroll number on Friday morning, and that usually means the last hour or so of that Thursday tomorrow is going to be a little bit low volume, a little bit thin liquidity. So I always try to kind of back off towards the last hour of the session on that Thursday before the non-farm Friday number comes out on Friday. And as you can imagine, we'll have a very big video tomorrow night talking about the game plan for what is another very big news report coming out on Friday. So again, we want to be careful that last hour of the session tomorrow. Be careful around the close tomorrow because that non-farm payroll is coming on Friday. Now, back to our charts, because the charts, of course, the charts are where the money is made, right? We know we have some news tomorrow. That news will be a good catalyst for us, but we're going to find the entries, find the exits, and time the entries based on these charts. charts. Now, I'm going to cover all my favorite trades on each of these markets here tonight. Make sure you watch all the way to the end, guys, if you're serious about your trading, because you'll learn different trade ideas, different tactics as we go deeper into this video. And I do try to save the best stuff and wrap it all together towards the end, so I'll give you reason to stick around all the way to the finish. Let's go S&P, though, NASDAQ, and we'll finish up tonight on the crude oil futures, finishing up here on the video here this evening. Now, first things first here, this is a 10,000 tick chart. These will all be tick charts, and you can always see the time frames in the upper left-hand corner. Also be aware the S&P and the SPY are very similar to the NASDAQ and the QQQ. So basically anything we talk about on the NASDAQ can be applied to the S&P. The S&P can be applied to the NASDAQ. So just be aware of that. And I'll try my best not to repeat myself back and forth too much here, though, but there is a lot of repetition in the way we trade, right? Trading is a lot of a repetition. Once you find what works, you keep doing it. Anyways, over on the Emini and the SPY, there are basically two key insights right now. Let's start first with the 2-day setup. Now, in my trade room, I'm always talking about what I call the 2-day setup, and that basically means look back over the last couple days and see what the overall context is. And what I usually do is I'll go back over the last 2 days. In this case, though, you really want to go back the last 3 days, right? So it's really kind of more of the 3-day setup. But long story short, the bottom line is you can see, like I said in the introduction here, you can see we had that strong run up last Friday. They retest the high, and now they've run it all the way back down to that low. And you can really look at this almost like one big range, right? It's one huge range here. And so that really makes it very difficult for anyone to want to sell down here. It's not a great place to get short. Now, we do, of course, and again, keep it in mind, right? This kind of big trading range, right? Market's going to want to rotate back and forth inside that range if they can't break out and go lower. That, to me, is a really big clue here for tomorrow. And the second kind of key insight on this is that strong move down. Now, you can see right away, it's a very strong move going lower, right? They took out their measured move. They take out what's called a pendulum swing off that range. It's a very strong move down, and anytime we see a real strong move in one direction, what do? We have to respect that momentum and basically anticipate a pullback and a retest of that low. That's what I know whenever I see a strong move. I anticipate a relatively deep pullback. Of course, sellers, we assume, will try to sell that pullback off overhead resistance, and we assume they're trying to go back down and retest that low. Once they retest that low, do we break out and go lower, or do we bounce and basically turn this into another trading range? And there's a lot of ways you can make money on that, a pullback, on that bounce, and we're going to talk about that, obviously, here today. Now, when you think about these two components, right, you get that big weekly trading range, and we're sitting right around this huge level of support down here. You combine that along with that strong move down, and you begin to see kind of the ways in which we can kind of confidently trade this here for tomorrow. There are really only a few different scenarios that we want to get prepared for, because nobody really knows exactly what's going to happen tomorrow. We want to make sure we plan ahead and ready for no matter what the market throws at us. Now, first of all, because of this big support area, and because of the sheer fact this whole move came off of the FOMC, I think there's definitely some reversal potential right now off of this low. So I do want to talk about how to basically pick the bottom on this and trade that reversal. Now, that reversal may not last forever, right? We may end up around these areas of resistance, and this, of course, is where bears can come in and sell back down. And then, of course, once we get back to retest the low, you know me. If you watch these videos, I love me a double bottom reversal as well. So there are definitely three very easy ways to plan ahead: the reversal off the low, the pullback entry, and that double bottom bounce. Now, as you can imagine, the reversal off the low may turn into a full-blown short squeeze, a full-blown reversal, and we definitely have a couple ways in which what will probably be some of the easiest money to make is on that full-blown reversal. So we'll talk about how to get in on that if it does just V-bottom off of this low, and a little bit later on in the video, I'll talk about if we keep on bleeding lower, right? If we do keep going lower, because there's always a chance the market may not be quite done yet. We got some levels below us there at 37, 36 half level right below there. So it may not be done yet, and we'll talk about how to sell this thing or buy it, of course, right, if it does want to go lower. So first of all, let's talk about the failure, the reversal, right? Let's cover the reversal here first. When it comes to kind of picking a bottom right now, whenever I try to find a reversal, I need three things. One, I need a major turning point like that last week's low. Two, I need signs of exhaustion. And three, I need some sort of catalyst, like a stop run. And the best way to do that is to make sure we basically trap in some of these sellers. So we're already at a pretty good level of support. We're at a pretty good turning point in the market. We got a lot of momentum going lower right now, and we have to what? We have to anticipate those bears are going to want to sell that pullback. So I don't want to buy very high. I want to buy nice and low. And to do that, I'm going to use what's called a crown reversal pattern. These are, in my eyes, one of the best ways to time a reversal when you're simply trying to pick a bottom like this, right? Because the move lower is so strong going lower, we don't want to buy it as it's going higher, because as it goes higher, you're going to see a lot more bears coming in. So the best way for me to time the kind of the bottom of this is to trap in those bears, signs of exhaustion, and then think about where those sellers are going to have their stops, right? And that's going to be our catalyst to get that juice that we need to really make this a reliable trade. I want to buy that trap low below that prior swing. Remember, sellers want to sell high, so one try, two try for the bears, and then as they trap low, that's the best way to pick that bottom. Now, let's say for example though, we don't get that crown reversal, or the market simply pops up and goes higher. Now at this point, we do expect there to be some bears coming in, right? Got a lot of levels of resistance up overhead, and we're expecting some bears to come in here right now. But again, because of that major weekly low, the odds aren't exactly in their favor at this point, right? So if I want to be a seller up here, I have to then basically anticipate buyers, right? Buyers are going to want to come in and try to buy that pullback, right? And that's where we can get our edge to sell it back down again. In this case, I want the buyers trying once, I want the buyers trying twice, and once those buyers commit, because again, it makes sense that the buyers would try this because of that big weekly low. But remember, it's a very strong move down. We can't count the bears out just yet until we see it really jump off that moving average. Once those buyers are committed, then we know where their stops are, then we know where their pain is, and we can sell this sucker now, going right back down to retest that low. One of my favorite trades in a bear market is to get that nice steep pullback, get those aggressive buyers chasing after it, trying to force it. It's not a bull market yet, and once those buyers struggle and fail, we'll talk about signal candles. You guys learn all about signal candles in the free video courses, right? The free trading course. So same stuff I talk about in the free trading course for that two-try failure, right? And then back down. Now, I'm going to talk about later on, how we buy that double bottom here in a moment. So make sure you keep on watching. We're going to cover that double bottom because that really is one of my favorite trades in any market condition. Next up, though, I want to think about now, what if we do get that pop-up? And how would this market kind of confirm that reversal? There's basically two ways in which we confirm the reversal. Again, I can look for that crown reversal off that low the minute they come in and they jump off that moving average, right? Now, again, I'm not going to buy that first pullback, right? Because of the bearishness in this market, you have to give the bears the benefit of the doubt right now. Let those buyers try a couple times and then sell it back down again. But if the buyers, if they can hold that pullback, and get a jump off that moving average. By the way, this is the 21 moving average. The 21 EMA is what I use on all of my charts, especially in my trade room. You'll learn more about how we use that in the free trading course. But once I get that 1-2 jump off of that low, then we know we have a change in momentum, a change in the market personality, and now we can go out, mark off that high. We can find a channel off using that trend line, right? So I draw that channel backwards, and then what I want to do is I want to drill down and find a prior swing. And, I can use any of the entry setups that I teach you guys in our free trading course, right? Things like traps. I love to get below prior swings. Traps work great. Failure patterns work great. Pullback combinations, strength moves as the market's going higher, right? Again, these are all the same entry techniques I talk about in the free video course, which reminds me, I know most of you guys have taken the free course. You've learned all the entry tactics, but if you're one of the few folks who are watching tonight, if you haven't grabbed our free trading course yet to learn the strategy I'm talking about, I'll put a link up here for you in the upper right hand corner. Grab that link, join the free trading course, because the strategy that I teach in that free course will make it remarkably easy to know where the best winning trades are going to be. It'll make it easy to know, more importantly, where the losses are more likely to be, which is a really big benefit. And one of my favorite parts about my 3-step strategy, which you'll learn in that free course, is it gives you a roadmap to follow. It's perfect for someone who's trying to make a jump into full-time trading. So if you're sick and tired of missing the best trades, or you're taking too many losses, grab that link, join the free course. Great for a serious trader, because I've got hundreds of examples of things like this, right? Of that pullback, the jump off the moving average, right? We call these 1, 2, 3 reversals, and then finding that channel. And again, you'll learn more about timing the entries off of those lows. Now, where would the buyers want to go in that situation? Where do the buyers want to go? Oh, we know where they want to go. They want to go back up, and they want to take out those highs, right? Those Powell highs, we'll call it, for tomorrow, right? And again, same thing on the NASDAQ. Now, there's one more reversal I want to talk about. There's one more reversal here. We're not quite done yet on the reversal side here. Let's say, for example, that we do get that nice deep pullback. And again, we might get that crown reversal here, and then it might jump, right? So don't forget, that crown reversal off that low is definitely a valid setup. But let's say for now, though, we jump up, right? But now we don't exactly pull back to the moving average, right? We don't pull back in the buyers once, buyers twice, back down again. We don't pull back and jump, right? We begin to grind as we go higher. Okay, that grinder is a dead giveaway, right? Because that grinding motion, when price action grinds like that, it's oftentimes very slow when it does that. Sometimes it's fast. It's oftentimes pretty slow though. When it grinds like that, what it basically tells us is the sellers who we thought were waiting to sell short up here, they've left, right? They're no longer selling. And what's happening is all the bears are getting out of their positions, which causes the market there to kind of flutter higher, right? Now the buyers will come in, they'll find a new trend line off that high, they'll pin that trend line off that big low down there, and that's going to create what I call a hidden channel. Then, as I mentioned before, I'm going to go out, I'm going to mark up some of these prior swings. And one of my favorite trades is getting underneath the prior swing. That's where traps live. Get underneath the 21 moving average. Hopefully the bears will come in and sell off the moving average, because if they don't, you know where their pain is, you know where their stops are. We can buy into stops, we can grab that first pullback. Again, same stuff we talk about in the free course, right? The traps, the failure patterns, the pullback combinations, and again, we know where the market wants to go at that point. All right, guys, so at this point now, we get a pretty good idea now how to buy it off the low, how to buy the reversal, and also too, right, if we do end up going higher, how to make some money on trapping in some of the buyers who are being a little bit too aggressive and picking their pocket for that run back down. Now, let's talk about more game plan on this. What if we get back to those lows now? So, think about it. It's a very good chance we bounce off that low, and that would definitely be a great trade for us. We should certainly want to keep that on our radar for tomorrow. And we may also shoot right through it, right? There's no reason why the bears can't unload on this thing and blast this thing lower. So let's talk a little bit more deeper strategy here as we go. Let's grab the NASDAQ though, right? The NASDAQ, of course, is very similar to the S&P, right? The NASDAQ, the QQQs, they're almost identical. They're a little bit different here. You'll notice the difference here in a moment. So there's two key insights, right? The first one, again, is very similar to the S&P 500, right? You can see where we are. We had that big bloodbath move, that tech bloodbath that we saw last Thursday. All the tech company earnings came out and missed their numbers, right? So that was that big move down. They get that strong run up. No surprise. They pull back. They basically retest that high. And then, of course, we talked about this last night, right? We got that breakdown below that low. Bears, of course, now take it right back to that low, and this basically becomes one big trading range. We've talked about the bounce, right? We talked about that. Now let's talk about if this market goes lower. How do we buy it as it goes lower? What if it goes sideways as it goes lower here? There's a lot of more variables here we want to game plan together here. And again, my kind of point of doing these videos is to get me ready so that, because again, we don't know what's going to happen tomorrow, right? It's a wild market out there these days. I want to make sure I have a game plan. I want to make sure you have a game plan to make some money on, no matter what we get here. So we know we're bearish. We covered most of the reversals already over on the S&P 500. You can see right away here. This is a very, it smells like an area for a reversal. Notice this produce thing here. Notice how the market made a complete symmetrical rotation off that high. These are very common during big news events, right? They pop it up during the FOMC, and surprise, they run exactly the same amount all the way back down to the opposite side. That is also, that's not a bad clue for, again, major support. Anyways, let's talk about the bounce. Okay, so we get that move lower, we pop up, right? The buyers struggle, they go back down to retest the low. Now what do? Now the fun begins, right? Now the fun begins. This is one of my favorite trades. We pop up, buyers try, we're back down to retest that low. As we always say, mission accomplished, right? Because anytime we see a strong move in one direction, we expect those bears to come in and retest the low. Now, the smart money, right? The quote unquote smart money is selling that deep pullback, right? Because sellers, they want to sell high. So who would be selling down here? Is that a really good idea to sell down there? No, it wouldn't be. It wouldn't be seen as a very high, percentage trade, because you're not selling high. You're selling low. You can't risk small to earn large at that low. You can take a small amount of risk for a big amount of reward selling a deep pullback. But once we get down to these lows here, we have to assume that anybody selling down there is an inexperienced trader with a small account, with a tight stop loss and a very short leash, right, on their trades. So we pop up, the buyers get roped in, we drop it down. Now, think about those rookies now coming in. Let them try a couple times. Remember, if you want to pick a bottom in a bearish overall environment, what do we need? We need a major turning point, like a previous low. We need signs of exhaustion, which again, I use the 2-try rule. Right? You'll learn all about that stuff as a student of mine. The 2-try rule is really a very big piece of the equation. It allows us to not have to use indicators, right? Indicators, they lag too much. Indicators, they put you in too early or too late. Signs of exhaustion, price action setups are, in my eyes, superior indicators. They don't lag, right? They're right when they're happening. Anyways, bears want to sell high, right? So get them trying twice. And then think about now, right, where their stops are. Right? And I want to be hunting to buy right into those stop losses. One of my favorite kind of tricks on this is to draw it like this. What I'll do is I'll draw a trend line off those highs. I'll bring it down off that low, right? It's like a hidden channel. And then as those bears come in and try a second time, I'll grab that signal coming right off that trend line, right, coming up, and that will give me that blast going higher. Again, this is a 2-try failure. Notice it's not the crown reversal that we need to use whenever we are trying to pick a bottom, right? So if I want to pick a bottom, like I mentioned earlier, I need that trap. Why? Because as the market goes higher, more bears come in. On the more recent example here, I don't need that trap because the bears, they already got their money, right? They're already fat and happy now. Make sense? So I can be a lot more aggressive on that double bottom reversal. Now, one thing you want to keep in mind on this is that if we can get that market now running higher, I can now go out and grab a new trend, basically a new channel, right? Find a new trend line off that high, mark it off that low. And, I'm going to keep it simple right now, but I like to grab that first test off that new channel. Does that make sense, right? So as we kind of punch higher, as the market traps in those bears and we punch higher here now I go out, I draw a trend line off the high, I mark that channel off the low. And again, I'm keeping it simple right now. You'll learn more of the smaller details in our free trading course, but traps, failures, pullbacks, right, off of that low. All right, that's a really great way to add a little bit more to this as we get that double bottom, if we get that double bottom reversal off that low. So keep an eye, right? Keep an eye on that, okay? I love those reversals. Now, one more thing you want to think about here, right? So let's say now we pull back and we blast, right? And we run right on through that low. That is something we have to be prepared for here tomorrow. Next big level below us is 10,713, 10,745 there on the Nasdaq. Over on the S&P is a little bit smaller window here, right? That 3736 half. If they can get through that though, the big bear objective right now for the E-mini, 3641 half. What's the big bear objective right now for the Nasdaq here, right? It's going to be down at that, down at that 10,484 and 3/4 area. So here is a couple things that you want to think about right now. Let's say the market keeps on grinding down, right? Let's say we keep on grinding down here. Once I start seeing that 1, 2, and that trap, I can still use that crown reversal. I can still use that bigger channel coming down overhead, right, to come in and trap those buyers. 1, 2, and then sell into those stops. I can still use that double bottom, that 1, 2, and buy into stops from there. So if we do keep going lower, not a lot changes, right? Not a lot changes. And again, if they do hold that pullback and jump off the 21, what is that called? 1, 2, 3 reversal. Find that new channel, and we're definitely buying that first test off the low of that channel. So even if we go a bit lower here, the game plan really doesn't change very much. Now, where things become a little bit more difficult is if we go up, come down, and spit out through those lows. What is most common whenever we pull back like this and retest that low and then keep going are going to be those two reversal patterns that I talked about before. Let's say, for example, right, we pull back to that moving average now and we just jump, right, and we blast right to that low. Again, doesn't seem likely right now after a big move down today, sitting at weekly lows, but again, we better be ready for it. So if we do pop up, the bears sell it, we retest that low, mission accomplished, but now the bears come in and they whack it again, right? They blast it out below that low. It's pretty simple, right? The game plan's pretty simple. I'm going to mark a trend line off that low, and what I'll usually do in these cases is I'll kind of look at, okay, that high, and I'll find a good fit, right? Oftentimes, it'll be that bigger top up there. That will give me that channel. And remember, anytime we see a strong move down like this, what do we expect? A pullback and a retest of that low. I'm going to look left. I'm going to find prior swings, and I'm looking for entries. Things like things like buyer failures, things like bull traps above prior swings, right? Things like that. So if we do end up shooting through that low, I'll be finding that hidden channel, as we call it, on the way down to take out that 10,713. And if this really punches, right, that 10,484 area as we go. I would also keep in mind, too, goes up and then shoots and grinds, right? Goes up, bears come in, they trap in the buyers, we retest the low. Now, though, it doesn't exactly pull back and jump. It starts to grind down. Those are even better. They're even a bigger giveaway. Mark that low, mark that high, right? Drill down, find those swings, and you get the point, right? You get the point. I'm finding that new channel. I'm planning my entries, right, off the high of that channel. Find those prior swings, trapping those buyers. The easiest money you're going to make is when you're getting price up above that 21 moving average. And you'll see a lot of examples of this, obviously, in the free trading course I mentioned earlier. But that's the easiest money. The easiest money is get above the 21, up around the high of that hidden channel, get those buyers to commit, and just sell right into those stop losses. get that retest of that low, leave that runner down at that 713 level. I like that strategy as well. Now, one last thing here on the NASDAQ that you kind of want to be prepared for here is that if we have, for example, a range, right? If the market begins to go sideways here in a trading range, the only thing that really doesn't change is we no longer look for that crown reversal, right? Because obviously it'll be a range. It won't be that crown reversal. As we go higher, it's the 1, 2 back down again, right? Same idea there. Or do they pull back and do they blast into that reversal? Same basic idea. The one reason why I mention this is because sometimes what happens is these big bear markets, these big bear moves down, they'll go into a trading range and they'll get like a head fake off the low, right? And we talked about this last night. My favorite breakout pattern is a failed breakout. So I'll tell you, if we go sideways, this could really be a really good trade setup for us tomorrow, because if we were to punch lower, imagine now we punch lower and now the bears try once. Yes, you get this now, right? Bears try twice. Ranges are magnets, right? Ranges are balanced areas. And so if we go sideways and we try to spit out that low, remember, it's an overall bear market, so we got to be a little bit patient on the entry. But if I can rope in some of those bears with a 2-try failure or a crown reversal, my goodness, that is a fantastic, fantastic trade, because oftentimes what happens is as the market now rotates back higher, we're already at those multi-day lows, those prior week lows right now. And so think about it, this thing could blast as it comes off of that low, right? It could take out going higher, pull back to that moving average. It could start to grind, right? Grind up, and that makes it easy, right? Find that new pop and grind channel, right? Find that first pullback. That's an easy trade right there. You won't want to miss that one. Or, right, it may end up pulling back, right, and blasting, and that goes into that 1, 2, 3 reversal, and we find that channel from there. So I wanted to make sure, I don't usually talk a lot about ranges unless we see one, but this is a very viable scenario for us here tomorrow. And again, this will also apply on the S&P, and you could probably say the S&P might have even more of a chance for that, because you've got that little level down there. It's actually not a little level at all. It's a pretty big level, that 37, 37.5, right? If we go sideways here and then kind of spit and trap low, come on. That's a great reversal there as well. We call those slingshot reversals in our trade room. Anyways, so keep that game plan on your radar for tomorrow. And don't forget, we're going to go over this again tomorrow morning in our trade room at 8 o'clock Eastern time. Let's wrap it up tonight on the crude oil. I know I'm a bit late to get to oil, so I do apologize. Thank you so much for sticking around all the way to the end. By the way, if you're still watching this video right now, you are the person I do these videos for. I know people these days, they have short attention spans. They want me to make these, TikTok style videos. But if you're watching right now, I know that you are committed. You are the person, you are the folks I do these videos for. If you're watching 34 minutes into this, I would have killed for a lesson like this when I was a new trader, and that's why I do these every evening, right? It really helps out the community. Anyways, there are 3 key insights on the crude oil right now, or the USO. One of them, of course, is the 2-day setup. And again, I call this the 2-day setup. Sometimes it's 3 days, like I mentioned earlier. But look at the last couple days here, right? Last couple days here, we basically had that strong rotation off the low, and we're basically now over a multi-day period, it's basically a bull market into a channel, right? It's basically what it is. It's basically a bull spiking channel. Now, if you're a student of mine, or if you watch my videos a lot, you probably know that spiking channels are really, really important clues, because first of all, they tell us we can buy off the low of that channel. Right, that's one way to do it. But the best entries, this is why I said in the intro earlier in this video, the best ones are down around that first swing low, around that first pullback, right? Oftentimes, that's where the best entries are going to be. So I really, really, really hope that will be one of the best ways to buy this thing here for tomorrow. And obviously, too, right, if they did get that pullback and the bears would hold this, right, they'd want to go back and take out that low. I'll tell you, it's not going to be easy to be a bear right now. We'd have to see something pretty drastic change here. Possible, definitely possible, but with what we're seeing right now, though, the bears have a very difficult job, because The second big clue is a bullish range with rotation off the low. And this is exactly what I just talked about. A little bit different, right? A little bit different on the NASDAQ, right? So here's a range. On the previous chart, I talked about how it was bearish going lower and possibly a slingshot going higher. This one's even more, of course, bullish because it's a bullish bias into that trading range. Now we run out. Now because it's so bullish overall, there's a lot of potential right now for buyers to come in and buy this low, and also to punch this thing through that high and get a breakout. And of course, we get a big bull objective overhead. 92.63 is the big bull objective. And as I mentioned earlier, it's that time of the year again where prices of oil come into factors. So this is kind of the busy season, if you will, right, for energy traders like we are in our trade room. So we get them all covered, right? 2-day setup, bull range, spike and channel. Pretty straightforward here. Right now, the biggest factor right now is we'd almost like to get this thing to go a bit lower. The best way you want to trade this right now is as it goes lower, we're trying to trap in the bears, because again, the easiest money you're going to make in a bull market is getting below the moving average, get into in this case, some level of support, right? Some level of support, trap in those bears, right? Get those bears to come in and get short, use their stops as fuel for that, what I call a failure into pullback combination. And you'll learn a lot about this in that free trading course. That failure, we're buying the stops. And then once it pops up, we can buy that first pullback for that failure into pullback combination. Now, what if we go lower? Right? I hope we go lower. If we go lower now what's the concern? Momentum, right? Momentum is a little more bearish now if we go lower, which is perfectly fine by me. Let them try twice, right? Let them go up, try once, let them try twice. It could be a crown reversal. That would not be a bad thing whatsoever. Trailing off that high, off that low, right? And again, we want that nice strong signal for that reversal. And if you can get that nice strong signal and get that reversal, then we can do what? We can mark off that high, we can mark off that low. We talked about this before in that double bottom reversal on the NASDAQ, right? That is a great way. To trade it going higher. Or maybe it pops and it grinds, right? Pops and grinds and goes higher. You know this now. You know this game. This is a great setup, right? That pop and grind. We can now find that new channel. We know the buyers want one thing. They want to go back to retest that big high, right? That big high up there, that's what they want. So no matter how we do it, whether it's a pop and grind channel or a kind of a hidden channel there, find that channel and don't miss that first pullback off the low. Now remember, as we go lower, the bears have to come in and they have to hold that pullback and run it lower, right? They didn't do it here. We'll see if they do it there, right? They have to hold that pullback. So as we go lower, they're going to have to hold that pullback and kind of show us they mean business, right? So as we go lower, the bears will have to come in and they're not going to fail and go higher. They'll hold it and they'll jump, right? They'll really rip right through these support levels. Again, didn't do it here. You can see what happens though, right? Pull back, failure, and then punch back higher here. But if they can hold that pullback, we're going to mark off that low, mark off that high. Nothing different here, right? Nothing different here. That first test off the high of that channel, or it could be a pop and a grind going lower. It's the same, right? Same basic idea. It's just two different ways to find that channel. In both examples, selling that first pullback off the high of that channel. And again, we know where they want to go at that point, right? That 85.30 area, that's that big low. That's where they're hunting for. Now, what if we go higher? Right? If we go higher here, this is where we look for those breakout patterns, right? So we go higher, we pop up, we grind, right? We grind, easy, right? Find that channel, buy that first pullback, easy one, right? We take out that high, we pull back to the moving average, we jump off the moving average, easy, right? Find that high, find that low, you got it, right? Grab that pullback off of that low. Where do the buyers want to go again? They're going to want to grab that 92.63 level. Now you'll notice I marked up what I call the pendulum swing. So just be careful, right? If we do end up back at these highs and we struggle and we struggle and we struggle, we may end up back around these lows again and keep on buying off that low. So just be careful not forcing that breakout, right? Remember, there's a big difference between up, back, and blast, right? Or just up and chop, right? It's not exactly a very good sign yet. We see a lot of times where the market will pop up, pull back, it'll try to break out, right? Like this example. I don't want to buy that pullback, right? We haven't broken free yet. So when I get this move going higher, show me you mean it. Show me you can hold that pullback, and then I can find that channel. You know, I mentioned earlier that free trading course will help make it easy to avoid losses. We talk about stuff like this quite a bit, right? It's easy to avoid losses when you know how to read the market structure properly. All right, so be aware of that possible head fake off that high. But remember, keep all of those pullbacks or those breakouts going higher here on the crude oil. And again, with the FOMC behind us here today, tomorrow really could be one of the best days to be a trader tomorrow, because again, we get that non-farm payroll number coming on Friday. All right, guys, great job tonight. Great job tonight. The game plan is all put together. We've fleshed out most of the viable scenarios for tomorrow. Now we come back tomorrow, 8 o'clock Eastern time, in our trade room, and we trade the plan together. Guys, if you're tired of missing the best trades each day, if you're taking too many losses, if you're making too many mental mistakes right now, what are you waiting for? Come out and do it with us every morning, 8 o'clock Eastern time. I'll put all the membership links. I'll put all the free course links to take the free classes. If you have any questions whatsoever, the easiest way to get help is to pick up the phone, call me in the office, or jump on email. We got chat as well. All right. I do answer comments in the comments section below, but I will admit I have a busy schedule. I can't always check the comments fast enough, right? So the easiest way to get help with anything we talked about tonight, call the office, send me an email, jump on live chat. That'll be pretty much instant help for you for whatever help you need, whether it be the best brokers and data, or whether you want help getting into our free trading classes. All right, guys, great job today. Great job. We covered a lot tonight. Get some rest. Busy day tomorrow. And of course, we'll come back tomorrow, 8 o'clock in the trade room. If not, we'll see you guys same time, same place tomorrow night, and we'll get ready for another busy day on Friday. All right, guys, as always, be well, be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.